So I think that the first one, you're correct that there are so many questions that need to be discussed about the way this system would work. And I think that's the thing that we're trying to do is create this public debate. So we've put forward an idea, which we think there's a lot more research to do on that in terms of exactly how it would work, how you could implement it, how you can make the transition. But we think the idea would work better than the system that we have today. And then we need, obviously, more economists to be involved, more people from government, and lots of different disciplines to take an interest in how this would work. And definitely, I think if you want to work with us on that, we'd definitely be keen to collaborate. We have a lot of research that we intend to do over the next 12 months to really figure out some of these details. In terms of how this relates to the Sharia finance, it's very. I'm not an expert on Islamic finance, but I know there's a lot of complementary ideas between Sharia finance and the kind of system that we've developed in terms of not creating money through debt. Also, in terms of the accounts that you would have at banks, where one is a risky account, and the other is actually just a 100% safe account where the bank isn't allowed to use your money. So there's a lot of similar ideas there. In terms of who should initiate such a system, I think really it has to be a government who implements this kind of system. But again, what we're trying to do is get the public pressure there to push this idea through. In terms of citizens' dividends, I think this is, again, a lot of people prefer this idea because it doesn't depend on governments choosing how to spend the money. But the problem with governments choosing how to spend the money is the same problem that you have with all tax revenue. So if the government is inefficient, then they can waste that money, in which case you may want to just give the money directly to people and allow them to spend it as they choose. The issues about public debt, so the government debt, that is obviously a huge issue, and the level of public debt is incredibly high. But, for example, the situation in the UK is that the debt that is owed by the government is less than the debt that is owed by households, and the interest rate paid by the government is less than the interest rate paid by households on their mortgages. But what the government is doing is they are so focused on reducing their own debt that they're actually forcing households to take on more debt, even though the debt of households is more expensive. And if you look at the economy as a whole, the best thing to do is pay down the most expensive debt first. And if you did that, that would require making the situation better for households so that they can pay down their debt. So I think some people are a little bit too focused on the public debt. It is still a problem, but we really should be worrying more than we are doing at the moment about household and private debt. Somebody mentioned the option of creating money and then lending it to businesses, and we think that's an option as well. The big banks are not really interested in lending to business, and there's really not a lot that you can do to make them lend to business when they want to lend to the property market. So one option is that you could create money and then lend it to lenders that would, so either business investment banks, peer-to-peer lenders that lend to businesses, different kinds of lending institutions that will actually put money into the real economy. So again, there's a lot of different options here. I think with inequality, obviously our concern with inequality is firstly it is a sort of moral problem that you have such an increase in inequality. I think the way that you get economists and governments interested is when they start to realize that inequality is bad for the economy, bad for economic growth. And that's starting to happen with things like Thomas Piketty's book. he's now like identifying the fact that inequality is bad for economic growth, and that's really getting a lot of interest. Like even the IMF has released a report saying that inequality is going to damage economic growth. Once you start talking about anything that harms growth, governments are really interested. Okay. So with regards to quantitative easing, the way that it benefits the wealthiest is the money is first put into the bond markets. So the way quantitative easing works is they purchase bonds from the financial markets. This new money comes into the bond markets, and that pushes up the prices of bonds. So the people who own those bonds become wealthier in financial terms. The problem is that those bonds are only owned by basically the wealthiest 10 or 20% of the population. So it's only the people that own the bonds that benefit from the rising prices. And the estimate from the Bank of England is that the increase in wealth per household is about £128,000 if you're in the top 10%, but very little if you're in the bottom 50%. Okay, so and then there was a question about whether we should control their ability to create money or just control what they lend to. I think it's really difficult to make banks want to lend to the real economy because they have this tendency to invest mainly in the real economy. To want to invest in property, because property is where they have a lot of collateral that they can repossess, and it's quite low risk. And property prices tend to rise, which is a result of banks creating all this money. So you have to put in an awful lot of regulation to try and get them to lend more to the real economy rather than the property market. And if that regulation doesn't work, then you can end up with the same kind of crisis situation that we've just had. And then in terms of the question of, it's true that banks can't lend unless we want to borrow. But in the system that we have at the moment, since 100% of money is created by the banks, if we want to have money in the economy, we have to borrow it from the banks. If nobody borrows, then there would be no money and the economy can't operate. And the problem with things like house prices, when house prices are so high, you don't have the choice to borrow maybe 2 times your income. You have to borrow 3 or 4 times your income in order to buy even the most basic house. So I don't really think that it's not like we're in control of the way this system works. There isn't really an option for people not to go into debt. That's I think that's covered all the questions.
Yes. Yeah. Any more, please, question from Madrid or Paris, so that we can conclude? Madrid? Yes?
We're fine on our side.
Yeah.
Thank you, Ben.
We're okay on our side as well. Very well answered. Thank you.
Thank you, Ben.
Thank you. Thank you very much.
I will make a final remark, please. Bear with me. So, first of all, I would like to thank Mr. Ben and to thank the audiences here in Jeddah, in Madrid, and of course in London. We really appreciate what you have done. And since the topic was about addressing the global financial debt or the global debt through the sovereign money, just to give you a few snapshots, from the history of the United States, during the war of 1861, 1865, Abraham Lincoln was trying to finance the war. So he approached the banks to lend him money. They have asked for 23 to about 36% of interest to pay for that. So he was really furious, and he was advised to print the money, and he printed about $400 million worth of greenbacks. Ironically, in 1972, the U.S. Department was asked to calculate the savings that move or that step has saved the United States. So the calculation came out that we have saved $4 billion worth of interest had we have gone for the lending of money during the Civil War in the United States. So this here will show you just one example of how sovereign money can work for the better for the society. Also, once we talked about Islamic finance and the history of Islamic societies, showed that we did not have incidents where private entities were responsible for money. It was all the time sovereign. So this might put us a hypothesis that relative stability in the Islamic world due to this probably, and the hypothesis that instability in the Western world due to or one of our major attributing factors. So this is an interesting research to conduct. And also there are interesting material, I think you might have seen, Ben, very interesting book, Risk Sharing in in Finance, the Islamic Finance Alternative by Wiley. It has been published in 2012. So that might be interesting to show you that, yes, you have gone good in tackling one of the aspects, but interest for us is very, very important and problematic in economic doctrine. And for my audience here, there are very interesting books, as you mentioned, Modernizing Money, The Grip of Death, Housing of Debt, The Debt Between the Devil and Between Debt and the Devil, the latest book by Adar Finner. Thank you very much, anyone. And that's it.
Thank you.
Thank you.
Thank
Bye-bye.
you. Thank you very much.
Thank you and goodbye.
Okay, bye-bye.